Hello, my name is Drew McConaughey, and this is the inaugural video that we're going to put up to talk about complex issues and try and break them down into the most understandable terms. So the first one that jumped out at me was this GameStop, Wall Street Bets Reddit page where retail investors are coming together and really creating some serious chaos within the marketplace. The person slash expert that I brought on today to discuss this is Chris Denholm. Chris Denholm is a good friend of mine. He is a wealth manager, runs a boutique firm called Objective Capital Management out of Northeast Ohio. And I can't think of anybody better to run me through this than Chris. Chris, thanks for coming on.
Of course. Thanks for having me.
Yeah. So let's just start off from the top, right? What happened? How did this phenomenon happen?
So it's a number of things, right? First off, shorting a stock or a short squeeze, which is what has essentially happened in GameStop in particular, is not an anomaly. It's not something new. These positions get shorted and then people discover usually a hedge fund or a large money manager has this short position and they get squeezed. So the mechanics of the short squeeze essentially are when you short a stock, you are borrowing the stock from a broker dealer and then selling it before you actually own it. So you're kind of doing things in reverse, right? You're making a bet that the stock will go down so that you can then buy it later at a lower price than what you originally sold it. Now the mechanics of how you do that, you do it on margin, right? You get a loan essentially to do that because you don't actually own the stock. Along with that comes margin requirements, right? So in case the position gets too far ahead of itself or goes the opposite direction, the broker dealer can then come to the investor and say, hey, you owe us a bunch of money. You need to make good on it by 2:30 today, right? So they're aware of when these margin calls will happen, but that's the situation that people usually take advantage of, right? They know that someone is short, so they buy this, whatever it is. And that's the thing that's interesting about it is it doesn't matter what the company is. They're not buying GameStop because they believe that the future of video games is in retail brick and mortar stores.
Yeah.
They're buying it to take advantage of someone, right? So that's not a rare occurrence. That's been happening for years, decades. People have been getting short squeezed. What's a little bit unique about this situation is the victim, so to speak, is a hedge fund or a number of large hedge funds. And the kind of assaulter, for lack of a better word, is this conglomerate of retail investors that have kind of found each other through these various message boards and social media to kind of pool their assets together to make a play.
So is it your opinion that as this was happening, I don't know, a week and a half ago, right? These investors got onto the Reddit page and they said, let's buy it. Do you think that they understood? Do you think there was enough knowledge in that board to understand that, hey, if we buy this, we're going to put these hedge funds into a bad position. And then it's going to create this short squeeze where we all invest 5-10 grand together at once, put these people in a position where time is not on their side, and now they have to come fill the orders. Do you think that was a component of it, or do you think it was, we're young kids, we like GameStop, we want to make sure that the company survives?
My opinion is that there were some people who, over the last few years, got very educated on the ins and outs of trading and then spread the word inside. I don't think, look, maybe it was total luck. Maybe they thought that this company that has no business growing from a logical standpoint, maybe they got lucky and all these people just bought this thing and then all of a sudden they found themselves there. That's really, really a lot of variables that have to line up for luck. So yeah, I think that, just because retail investors are small or young, that doesn't mean that they're dumb necessarily, right?
Yep.
At all. I think a lot of these folks are very smart and they did know what was going on. However, I do think that over the last few weeks, there have been a ton of people that have been watching the news because it's a sexy story, right? Hey, this big, powerful hedge fund, all these very, Uber 1% people are getting taken to the cleaners by the common man. It's a great story.
Cinderella story, right?
Yeah, exactly. So to answer your question, I don't think it was luck. I think that people know what's going on. And I think that it's a testament to the technology in our communication landscape that it was able to kind of come together.
Yeah.
Now, is that a good thing?
Yeah.
Right? That's the follow-on question. Is that a good thing? I don't know. I don't know. Well, only time will tell. But I mean, what's it trading? Yeah, today's not a good day for GameStop. Holding the line today is going to be very challenging.
Yeah, exactly. And that's the thing, right? I mean, you all come in and you have this great idea together, but once that line starts showing some cracks, and people start selling, you don't want to be the last person holding the bag.
Exactly.
So,
well, and that's another thing that we haven't even really talked about, right? And it's been talked about in the media, but Robinhood is the app that is getting a lot of the press for being where everyone can get their free trades, right? Yep. You can go on and trade for free, but it's not a communist business model, right? Robinhood is trying to make money, and the way that they make money is they're essentially in bed with, or their real customer are large hedge funds, high frequency trading shops. A lot of institutional investors own Robinhood. So there's kind of the yin and the yang there, right? They're servicing and providing a service to people for free, but that's not really their customer. Their customer
Sure.
are the people that essentially have gotten attacked.
Yep.
So when there was the big thing that, hey, Robinhood turned off people being able to go long on GameStop and a number of other the names, AMC and a few of the other ones. Well, yes, the optics on that are god awful, right? Yes. It looks like they're going to service their real master and turning off the spigot, for lack of a better word.
So explain that, right? How does that help the hedge fund that these retail investors were no longer in mass allowed to buy the stock?
So first off, right, going back to the mechanics of a short squeeze, the way that you squeeze the short is by driving the price up, right? Yep. So the only way to drive a price up is to put buy orders in, right? Yep. So Robinhood essentially came out, I forget what day it was, last week, and said, you can no longer buy these names, you can only sell them. Which, yep. That alone just tells you, like, oh my God, they're letting these hedge funds off the hook, right? They aren't allowing the short squeeze to take place.
So what is your opinion? What happened when that happened? That now all the hedge funds are liquidating their positions, they're getting out while they can?
Correct. So by them getting out, they're then going in and buying the stock. So they're the only guy putting buy orders in. The stock is inevitably the price will come in, right? Because for every buy, there's a sell on the other side. So you have to match them. But it looks really ugly because that's their way out, right? Everyone could say, hey, look, Citadel has a big ownership position in Robinhood, and Stevie Cohen knows a guy who knows a guy, and there's a lot of ugliness there. But the reality is, Robinhood, there's probably a little bit of both, frankly. I'm sure some calls were made to do that, but Robinhood itself is extending credit to a lot of their customers to go out and buy the stock as well. And as a company, they have certain requirements for capital that they have to have. So when those capital requirements get called, they can no longer, as a broker-dealer, continue to leverage themselves. So I don't know. I mean, hopefully there's a court case, because I would love to see what actually comes out in it, right? And frankly, I think the country needs to see a big trial, or at least a congressional committee where people are understanding what exactly did happen.
Sure. All right. So I think that's a pretty good, I think we've kind of defined pretty well what happened. Next question is this going to continue to happen? Is this the new normal of the stock market? Or is this a one-time phenomenon where, in my opinion, what's going to happen is most of the people who are still in the positions, and just like you said, they're getting slaughtered today, they're going to continue to get slaughtered. So they're going to learn the lesson the hard way, and this is going to be a one-time or a 1 week or a 1 month type of phenomenon. But what do I know? That's why I'm talking to you. What's your
Right.
thought on that?
Well, the truth is, I mean, nobody knows, right? Like, I
Yep.
think that this has kind of been discovered that this can happen, and I don't think that it's just going to, I don't think it's going to be the case where they touch the hot boiling pot of water and they hurt their hand and they walk away and never touch the hot thing again, right?
Yep.
I think that this has exposed kind of a method for doing it, but it's not like this is the first time that, and traditionally, or I should say, there's a lot of young people involved in this, right? And this
Yep.
is, day traders, college kids. I mean, it's grown adults too, but it's predominantly been a young thing. And the communication of everything has gone through younger communication channels, whether it's social media or whatever it is. But that's been happening for generations, right? Like, I can remember when I was sitting in a college room and I thought I was a genius because I was trading WorldCom and Enron and
Yeah.
we were killing it. And they were like, well, what do those companies do? I'm like, I don't know, but they're awesome,
Yep. Yep.
So every generation kind of has their thing that exposes them to trading in the markets. And usually that exposure ends up hurting in the short term, but it does at least it gets people interested in the market to understand why things are happening the way that they are, to hopefully create good investors over the long run. So yeah, I think this will probably, I think that we'll be hearing about this a little bit more for a while.
Yeah.
At least.
And I heard they just jumped, like, silver's the new thing. Now
Yeah.
we're getting into commodities. I mean, it's super
But
interesting.
that's a whole nother bag of worms,
Yeah.
right? That's a whole nother bag of worms. The silver market is going to be a lot harder to squeeze than
Overpower. Yeah.
GameStop, right? Like,
Yep.
it's a much different market. And the trading mechanics of trading commodities, I'm not talking about trading ETF, that follows the price of a commodity, but trading actual commodities, that's a whole different world, right? Like,
Yep.
the margin requirements there, the leverage is much bigger.
Sure.
That's big boy stuff.
All right. I want to keep this nice and short. So last question. Do you think that this will affect the way hedge funds short stocks, right? Because it's public information, at least the put to call ratios on a stock is public information, right? Do you think this is going to change the way that a hedge fund looks at? Obviously, there's valuation metrics that come up to say, wow, GameStop has a kind of a bad business model now, and it makes sense that the stock is going to go down. But now I think in the back of their mind, they have to say, is this going to be where we get crowd shorted or a crowd short squeeze again, where a bunch of retail investors come in and hurt us because they see us taking advantage of something that they're interested in, right? Do you think that that's going to play a component? Which, this is the craziest part to me, right? This could change at least the thought process of these, hundreds of billions of dollars hedge fund, $1 trillion hedge funds.
Yeah, so I think my opinion on the matter is hedge fund guys that are running these large shops, and it doesn't even have to be large shops, but these are the 35 to 55-year-old versions of the 22-year-old kid sitting in his college dorm room trading GameStop, right?
Yep.
They have 2 decades of experience and they know that they have to evolve. So I wouldn't be surprised, frankly, if there were a bunch of hedge funds that were part of the short squeeze.
Yeah.
I would not be surprised at all. I think that this is just going to be another tool in the basket of I hate to use the word predatorial, but the aggressive return-seeking manager. I think that this is definitely on their radar.
Yeah, it's funny you brought that up, because I was like, how easy would it have been for a hedge fund to be sitting in that Reddit chat and licking their chops, right? They say,
right. Well, and who are the hedge funds hiring? The hedge funds are hiring the 25-year-old from Harvard and Wharton and Princeton and Stanford that has 2 years of experience at an investment bank, but they're all over those chat.
Yeah, sure.
That's what they do. So they've got the best and the brightest that are still using all of those same tools. So
buyer beware, right? You could be sitting in there in one of these chat rooms thinking you're talking to a guy like me, right? An average retail investor, and little do you know, you've got a MIT grad who's steering the ship to benefit the position, right?
Exactly.
So I agree with you, right? I think it would be super helpful and super interesting if you would get if there would be some sort of congressional hearing and they do some investigations into who was trying to create this market manipulation, for lack of a better term.
Exactly.
And were any of those, Steve Cohen's rival, right?
Right.
He
Well,
knows.
and everybody, let's not forget, Steve Cohen ran the .72, but he also got busted down to a family office when he was running SAC. Like, it's not like this guy is an upstanding citizen. There's been a lot of smoke circling him in particular, right, as a hedge fund manager for a lot of years. So I don't know. I mean, it'll be interesting to see how it plays out. Yeah. And I really hope that there is a congressional hearing so that we can try and get to the bottom of what actually happened. And that's kind of the one thing, the one silver lining is you've got people on the left and the right in government actually agreeing on something.
Yeah.
Right? Like,
AOC and Ted Cruz, I saw that. Yeah.
Exactly.
That'll be the first and the last for that.
Yeah.
All right, Chris. Well, I really appreciate it. I want to keep this nice, short, and sweet. It was really valuable insight, I think. I learned a lot. I know that. So hopefully the listeners get something out of it too. Definitely appreciate your time, and I'll talk to you soon, bud.